Okay, good morning and welcome to the early bird. And here we're looking at the Dow Jones on a daily chart. And I don't have last night's bar in there, but I just wanted to point out the larger pattern here, and this is it, I guess. So we're looking at 5 waves moving down through here, and then 3 waves back up. So we're looking 5 waves down for wave one, and then we're looking back for wave two, and then we're looking 5 waves down for wave three, then 3 waves back, or probably even more complicated because it will be a fourth wave there, and then a fifth wave down down to here, and then we'll get a stronger rally back up. Now, we're obviously in this first section through here. Now, I don't know if we are at the bottom of the third wave and we're having the little fourth wave rally right now, or we're actually at the fifth wave here and we're having a larger rally here. We are having a rally, but we don't know if it's that one or this one here. But we do know that once it's complete, we'll be going further to the downside. So that's what we've got to kind of work out and navigate through. Yeah, but we knew that we'd be coming into this situation. When I look at the Australian markets, I feel that we're at the bottom of this point here and we've got this rally coming up through here. But when I look at the US markets, there's a possibility that we're actually just in that little fourth wave there. So that's what we're going to sort of talk about and have a look at the options within all of that. Because, you know, we are essentially trading the local market short with CFDs, and you need to make up your mind on certain trades if you're going to sort of lock in the profit at these lows here, or you're going to ride this correction out here to capture this move down through here. And of course, we would also look to hold through this one as well and go down to this one here. So getting down to the 10,000, we just know it's going to be a little bit sort of bumpy. One of the things through here that we can sort of look at through here would be something like this here. What we normally find with trend lines, if you leave them in there after they've been broken, is that this will come back and retest it here. So that's something that we can look at. It also gives you an idea of where the price can come back to, and that would be 11,300 at that point there. So anyway, let's have a bit of a look at this situation to see if we're here and we're in the wave 4 rally, or we're down here and we're looking for this ABC back up. So we would basically, the difference is at the moment is that this one here would offer a higher rally at this point than this one here. So this is it when we're looking at the Dow Jones here. If we look at it, that the 5-wave structure down, which I'm taking from this high here because it was the high on the actual cash market, then we'd look at this down for 1 here, back for 2 here, all the way down for 3 here, and then the A, the B, and the C here for wave 4, and also pulling back to the 38.2 retracement level, which would be this line through here. So that's right, so that can just fail from here, and then we can move down to the 5th, which should take us down to the 10,800. Normally, if the extension's in the 3rd wave here, then the 5th wave will be pretty much the same length as wave 1 here, so we can just pretty much tack that on the end there. But also the 10.8 is a bit of a special number, but also the 10.772 there. So in that sort of area there somewhere, and then we would see the wave 2 rally come up. If that's not the case, then this wave 2 rally would be coming into this area here, coming back 61.8% up here of the length of this move down through here, and then would see this, you know, come back up to the this area here, the 11.4. The 50% at the 11.3 there, so we can just sort of consider that move there somewhere. So what we would see here in this case is we'd see this as this point here as just the A wave, an A and a B and a C, or even 5 waves up to there and 3 waves back and then another 5 up there. So that's what it could mean at that point there. So this is why you need to make some very clear decisions on the local market here in terms of locking in profits or riding this out. So yeah, just consider that this market can come back to the 11.4, and if it comes back in an extreme way, it can come back to the 11.5. Here's a retest there. But as it stands at the moment, that said, this line through here is at the 11,000 through here. So that's why it's correcting through there. 11,000's a minor level, and it's quite a large whole number, so that's why it's giving consideration there. So anyway, well, this is what we'll see here. When I look at the Australian markets, it seems that this wave 5 here is actually in here into this point here, and this is actually a wave 2 coming back. So the S&P 500 is pretty much the whoops, that's the UK market. Come back into the S&P 500 first. So with the S&P 500, I'm also kind of assuming that this is the actual high on the physical market here, on the cash market, and we're looking at 5 waves moving down through here to this point here. So, into this little point just here. Then we've got the A, the B, and the C here, and we could expect that to come further back up through here, but that may even be complete just where it is there, because the pattern seems sort of done and dusted a little bit there as well, and I'll just explain that in terms of just getting this into a bit of shape here. So this is all part of this structure coming down through here, and then we would call this the A, the B, and the C wave coming up through here, and the C wave would be up for 1, back for 2, up for 3, back for 4, and up for 5, and there'll be a little bit more to go in here. So we could say that this is entering into subgroup 2, the 65, the 72, and the 80. So we could be looking at the 38.2 retracement here, which should be the sort of minimum for a wave 2 at 1172 there. Yes, there is a bit of overlapping in this structure here in terms of wave 1, wave 2, wave 3, and wave 4, but we are involved in leveraged products here, so there is overlapping wave structure when you're talking about Elliott, when you're talking leverage, and more so in higher leverage things such as currencies as well, depending on how far they're leveraged. The Australian market here, pretty much the same as well. I'm sort of considering this to be wave 1 down here, and we're coming back for wave 2, and it can pull back up 61.8%, which is in here, the 50-60. So it's possible for it to come back to the 42, sort of 40, 30, 50 in amongst there. The real supply would be up here further at the I wouldn't expect it to go past the 42.72 there. But look, while it's we consider it a rally moving up, and while it's above 4,100, consider it positive. So you can use that as a bit of a guide stick, really. If that moves down below that, then you can sort of add to short positions there. But while it's above that, this is the period where you'd want to sort of cover or lock in any profits on any of those short trades we have. Okay, so you need to make your own mind up what you're going to do about that. So that's your job for the day. Right now, while indices are rallying, we're seeing gold correcting. Okay. Also with gold correcting as well, we're seeing the US dollar push higher as well. Now this correction here, we're not sure how big that it can be. This rally coming up from the 1700s there, as we've got on the charts, can be just a B wave, and we can be seeing a C wave come back down. of course, in the much bigger picture, then we'll be looking at this to go to 2000, but we just don't know. So what we normally do in corrections is that we just observe the first leg that comes down and see, see what it is. If it takes the top of this one out here, then we know that we're looking at a much bigger picture there. So as we expected, we will get some sort of correction across this level here in 3 waves. We just don't know if it's going to stay within the bounds of the number, which is always from whatever number that you're dealing with here. Top side group 1, so not finding support on here locks it to this area here, and also group 2 here locks it to here as well. So they're the sort of the perimeters, I guess, of a corrective market working across the main number there. So let's just see how we go there. Of course, this C wave here could actually be much lower down, but anyway, let's just see what we've got here in terms of patterns. So far here, this is a corrective pattern, but we just need to see if this is going to come down further and what shape that's going to take there. Meaning, will this first leg be in 3 waves or will it be in 5 waves? There's 11 or 12 different Elliott corrections, but if we can work out that it's going to be in 3 waves or 5 waves, then we can halve those 12 into 6, and then those 6 into 3, and so forth, and we can get an understanding of it. But let's just allow it to correct, and we'll pick up the thread there. Oil's just going to follow stock, as we know, so we're looking for, from that high at 90 there, coming back down through here. If we look at this as a 61.8 retracement level, then we'll see it come into the 87 mark here, and this point through here. We do consider it a rally, and it would be something like this. This would be the A and the B here, and this would be the C wave happening here. The C wave would be up for 1, back for 2, up for 3, back for 4, and up for 5 into here and complete there. But this would be seen as a retest of the 88 there. The important little number here too, why it's just sort of hidden in here, is the 8650, 65 level, and that will certainly play out as a strong resistance there. But consider that a top of a 3rd wave and a 4th wave there. So see that 3rd, 4th wave here, then the 5th wave, finish it there, and then that will fall in line with stocks as well. The copper market, a little bit unsure about the actual structure coming down through here. I know it's impulsive. I just don't know if, a bit like stocks, we don't know if that's wave 1 here, and we're coming back for wave 2 here at 61.8%, and then move down from that point. Or is this just a little wave 4 here that will just go A, B, and C, and then drop down through here? But we do know that being close to the medium level here, 400, is going to cause a few problems. And there's a lot of support in this market as well. As you can see here from all of these previous lows here, are just going to give this whole area a lot of grief. So as we mentioned, coming down into this area here of support, we just have to expect it to bounce around a lot and can come back up to these levels here before actually moving back down through here and eventually locking under the 400 here, the medium level. And that's what we're sort of looking for to create a larger bearish picture here. So we just have to expect it to bounce across this level here and eventually finding support, resistance under that level there. And of course, that's going to affect our material sector, the XMJ and all the constituents under there as well. So, the BHPs and all the rest of them, they can be looking to find support through all of this as well. But, that's all minor trend stuff. The medium trend stuff and the major trend stuff is still to the downside. And we're seeing that in the currencies as well. So we're seeing here in the US dollar index here, we're seeing this market push up as expected. And yeah, so as you know, we've just been sort of following it up. And so we're looking for, it does appear that we've got 5 waves here now. So that would also be the same for the US indices as well. So, getting that, if that is wave 4 here and wave 5 coming up to this area here, then we'll get that sort of A, B, and C back through here. Probably stay above the 75 at worst, and then move up again from that. So, as we're seeing the indices correct, then we'll see this find its final fifth wave up here as well, and then correct. The Euro's pretty much the same. This is the robo that we've been looking at, but this is the monthly now, so we can see that the previous monthly low's been sort of taken out, but we've been really working with the weekly charts here as such, and the daily, of course. But as you can see here, this is the first weekly bar here, the trigger here. This is the second weekly bar here with the trigger here, and this is the monthly low being triggered here as well. So there's been a whole series of triggers here, and we thought that we would get a retest back up through here a little bit sort of earlier from these sort of looking for this 5-wave structure to the downside through here. This is at the 140 through here, this grey line here. So that's really the support level there. So we can start to sort of look at that retracement level a little bit more now that we're at the 140 down here. And this is a general trend that's been followed down through here. And yeah, so it's certainly a downtrend, and any kickback will just be a rally, and we need to sell those rallies there. So, but now we're at the 140 here. I suggest that that we just give it some time here and allow it to sort of flicker around a bit. We should see some strength come back in here, depending on the top in the 5-wave structure for the euro that we just the US dollar that we just mentioned, up at $76 there, and 76 as the index rather. And also the indices as well, in them finding their 5 waves down for their lows as well. So once they've got their 5 waves down, which could be the case now, then they will rally and they will help the euro push to the upside. But the euro is just waiting for the pullback in the US dollar index. So try and bring all those three together in that picture there. And the Australian dollar here has got quite a nice sort of wave count through here actually, and there we go. So we were looking, just going over this a little bit, we were looking at 5 waves down for wave 1 here, in terms of the 1, the 2, the 3, the 4, and the 5. Yes, that could be wrong, and that could be the wave 1 here as well, but it doesn't really matter at this stage. The wave 2 back through here, and then the wave 3 down here is a really nice wave 3 here, because it's got the larger third wave in here as well, to here, and then it's also got in here, it's got 5 waves in here as well. So 1, 2, 3 here, 4 and 5 into here, and you can see the gap in the middle here, because that's where gaps normally occur in third waves here. So there'll also be 5 waves in through here as well, and then that would be the third wave in there. So really you've got like 3 or 4 degrees of third waves in at that point there. But anyway, moving along a little bit, we've got wave 4 here, and wave 5 is finished on 105 here. We've got the bounce through here, and I'm considering this wave 2 here, and then moving down into wave 3 now, and into wave 3. It should, if that's the case, it should pick up speed here a little bit. But I've got to kind of line this up with the indices as well. So let's just say that the 105 here, the midpoint, 5 the second strongest number and 1 the strongest number. Just give it some time here to work out if it's going to become support or resistance through here first. And if it's going to become resistance, then you'd use the subgroup 2 area here to trigger any short trades to the downside. Okay, that's really about it, really. So we just really need to prepare for sort of any rallies. This is just the cash market following the SPY, so to speak. And you can see that the cash is down at the old lows down here. And we could have the 5-wave structure here on the XJO in terms of 1, 2, 3, 4, and 5. I know this is quite a small wave structure here, but when you get the extension in wave 3 here like this, then wave 1 here and wave 5 are normally sort of the same in terms of time and size and so forth. But when you're dealing with numbers and influences from other markets, you've got to give and take a little bit, and these lows down here has really sort of shrunk the 5th wave up a little bit. But this rally that we're talking about can come back, 61.8%, so it can come back up. Well, these are the supply levels back up here, this chunk here and this chunk here. So at 42.72, it can come back to there. So what we'll be looking for is 5 waves down for wave 1, back for wave 2 somewhere, and then wave 3 to come down. Now, it may not come that high. That's the whole point. We don't know if this is just going to be a shallow correction to, to this point here, or even further up here. We don't know that yet. So that's the point of locking in profits on the daily robo, and on the weekly robo we'll try and accommodate the situation as much as possible. But yeah, so let's see how we go. We knew that coming down into here that we're going to get the rally. Now, are we going to get it from here, or are we going to have one more wave down and get it from a little bit lower here and then a push up from here? We don't know, but you've got profit there, so it doesn't hurt to lock at least part of it in at this stage. Alrighty, I probably won't put any trades out on the short side, because it's only going to get us into trouble, and I didn't particularly want to do it yesterday either, but there was a little bit of space there, and taking some of that profit at the end of the day yesterday would have been part of the process. Just remember, if the closing price passes the opening price, then you can reduce or add at that stage. And also today, if the opening price today on a stock is higher than the closing price yesterday, but doesn't take out the previous high, then that's also a sign to reduce as well. Just the opening price being above the closing price yesterday is another trigger to reduce on. All very helpful. Alrighty, good morning and good luck.